Good evening, dear colleagues. As always, it's Sunday, and as always, this is Dan Strelkov and the Forex Times project. I would like to traditionally invite you to the Forex Times community, where you will find unique forecasts based on data from the Chicago Mercantile Exchange, the strongest support and resistance zones, as well as strategic target levels, triangles as penultimate waves, individual consultations, and, of course, trading recommendations. Please come by. I would be glad to see you all. As usual, we start with the euro against the US dollar. Let's immediately turn to the data from the Commodity Futures Trading Commission, CFTC, where we see an increase in buyers by 59% and an increase in the capitalization of the trading instrument by 6%, reaching $279 million. Dear colleagues, professionals at the Chicago Mercantile Exchange have adjusted their expectations by hedging call options, which now have the maximum open interest far higher at the 1.14200 level. You can also see pure call option contracts amounting to 257 million at this level. Last Sunday, I talked about the target level with call option contracts amounting to 464 million, but there were no levels for hedged call options there. However, at the current level of 1.1200, we have both $257 million in call option contracts, and of course, the maximum open interest in call option contracts. In a broader sense, the euro is in an uptrend after the triangle formation. So, dear friends, if someone tells you stories that the American economy and the US dollar are doomed and that the dollar will soon die, please inform them that from a scientific point of view, you expect with a high probability that the US dollar will be under pressure for several months, after which we will see a significant decline. Because, friends, a triangle is the penultimate wave, and therefore, at the moment, we are seeing the development of a corrective wave structure AC, after which we will witness a substantial decline of the euro against the US dollar. Let's take a look, by the way, at where this wave began. So ACD, this growth started from here, mid-June 2024. Let's see what's happening here. Yes, mid-June 2024 is when this wave started. Therefore, 1, 2, 3, 4, 5 friends, we are either still developing the third wave, then the fourth and fifth are yet to come, or the third wave isn't finished yet, then the fourth and fifth will follow. At the moment, I'm trying to find a way to trade the growth. Friends, right now, an impulsive movement is developing. And if it has already ended and we see an obvious correction, you can set pending orders above the local maximum. You can also place orders here below the local minimum with a target level of 1.1420. Once again, let me remind you, this is the level with the maximum open interest in call option contracts, where professionals hedge their futures contracts for sale, and pure option orders amount to $257 million. Therefore, the trend for the euro remains upward with a target level of 1.1400. Gold. Well, friends, we are getting ready to sell gold. The reason is simple. Professionals are already hinting, or rather, they are outright shouting through option contracts. We have 238 million, 224 million, 600 million, and 616 million in weekly option contracts. And if we suddenly look at monthly option contracts, we will see strategic target levels of 774 million and $1.3 billion. Now let's take a look at what is happening at the moment. Globally, we are in an uptrend following the likely formation of a triangle, with the entry into the triangle occurring from the bottom up in an impulsive price movement. Consequently, as you already know, a triangle is the penultimate wave, and at the moment we are seeing the development of the final wave, which should be impulsive, either as a 5-wave structure or as a final diagonal triangle where we are still missing one more wave. But friends, there is a significant nuance here. You know that there are both initial diagonal triangles and final diagonal triangles. The rules for both are the same except for the 5th wave. In an initial diagonal triangle, The fifth wave must always either update the maximum value if it's an upward trend or the minimum value if it's a downward trend. However, in a final diagonal triangle, the fifth wave can be truncated. Therefore, there is a big challenge in catching the downward movement right now. Specifically, when we look at the data from the Commodity Futures Trading Commission, CFTC, I really hope that the fifth wave will not be truncated so that the downward movement doesn't begin right at the opening of the trading session. This would be very difficult to catch and frankly would be unattractive. We have a great resistance range at the 2567.0 level, and I will be crossing my fingers that we move towards this resistance range during Monday, Tuesday, and Wednesday, or maybe early Thursday. Then, upon the formation of a pattern, we will exclusively consider selling, marking the end of the fifth wave, and we can start considering selling as all strategic target levels are located below. Let me remind you that not only is the triangle the penultimate wave, but if you draw the volume profile from the beginning to the end of the triangle, you will see the maximum volume concentration exactly at the middle line of the triangle. This line serves as a very strong target reference point for us. So that's the forecast for gold and what to do in the upcoming trading session. If you're feeling eager to trade, scratch that itch with something else, but don't buy. Yes, I understand you might watch the price potentially rise and think, Den set us up, we wanted to buy, but he said not to, oh no. But friends, the fact is, if I'm right and we have a final diagonal triangle with a truncated fifth wave, you will be very upset when the price plummets on an impulse, and it will hurt a lot if you buy here. So let's hope that the price rises into the resistance range, after which we'll see an impulse, a correction, and then we'll make a decision to enter the market to sell. I really hope that the fifth wave will not be truncated. If it is, we will act according to the situation, impulse, correction, and decision-making on entering the market with sell-stop orders. That's the only way, friends, because there might be something else forming here that I can't predict yet. For now, I see the target levels at 1,300 and 1,420. And for monthly option contracts, the levels are 2,410 and 2,400. And for weekly option contracts, 2,430 and 2,420. And today we won't be discussing the S&P 500 index. Instead, let's look at the British pound, where there's a very interesting situation. As we know, there's a positive correlation between the euro and the pound. If the euro is rising, as I've just explained, then the pound is also likely to rise, though not always, but with a high probability. However, for the pound, professionals have expressed a different opinion. Despite a 42% increase in buyers, professionals have adjusted their expectations downward, both in terms of call and put hedging options. Moreover, market makers have revised the upper boundary of their range downwards, meaning the price is rising, the pound is rising, and yet all the professionals in Chicago have adjusted their expectations downward. I have a big question. What's going on? Well, take a look. The pound has reached the call option cluster that I mentioned last time, specifically at the 83.28 level. And in the middle of the week, we saw $345 million in call option contracts and call option hedges as a resistance level. The price reached this level and has stopped for now. If we look at the weekly option contracts, we'll see that there's nothing above us, just an empty field. Let's take another look. Absolutely nothing above. But if we look below, we'll find a cluster of option contracts that have long since expired. However, I've mentioned many times that professionals often make mistakes regarding the timing of price reaching these major option clusters, but they very rarely make mistakes about the levels themselves. Moreover, Remember this large cluster at 115 million, 77 million, 78 million, 39 million, and 39 million again. And if we now look at the monthly option contracts, we'll see that almost the same large cluster is located there at the 121, 120, 121, and $235 million levels. Nearby is another cluster of option contracts worth $244 million. For comparison, the capitalization of the pound is $46 billion, whereas the euro's capitalization is $229 billion. So these option clusters of 235 million, 121 million, 120 million, 121 million, and 244 million are very significant amounts. So friends, I believe that at a minimum, professionals expect a deep corrective downward movement in the upcoming trading week. And we can try to catch it because the nearest target level is the upper boundary of the profit range for market makers around the 1.29 level. This is 300 points from the current price. 300 points, friends, is a very good profit to catch. Moreover, what's interesting is that the upper boundary of the profit range for market makers on the monthly option contracts is 200 points away from the current price. And in both cases, the upper boundary of the profit range is below the current price. This indicates a very high probability of a deep corrective decline in this trading instrument, possibly from 200 to 300 points. I think it's worth trying to catch this profit. I hope you enjoyed today's lecture. As for the S&P 500, the situation there is still unclear, and there might be some minor growth ahead. In America, the word recession is being mentioned more often, so we need to keep an eye on that. As always, I invite you to join the ForexTimes community. Today, I talked about the euro, gold, and the pound, but the Australian dollar, Swiss franc, and Canadian dollar also look very promising for the upcoming trading week. For example, all strategic target levels for the Canadian dollar are far above the current price. A little hint, the first strong strategic target level for the Canadian dollar is at 1.4280, which is almost 800 points above the current price. So work those target levels, earn some profit, and come join us at ForexTimes. I'll be very glad to see you there. Thank you all. Have a great evening, and bye-bye.